After Bitcoin's stellar run to new all-time highs, a surprising stat has ignited fresh excitement across the crypto community. 98% of all altcoins have beaten Bitcoin over the past 48 hours. This phenomenon, confirmed by analyst Joe Wedson, marks a potential turning point. Could we finally be witnessing the long-awaited cyclical shift into altcoin season? Let's dissect the data, hear from leading analysts, map out why the next weeks may belong to altcoins. Bitcoin dominance (BTCD), the metric tracking BTC's share of total crypto market capitalization, recently tumbled from 66% down to 63.8%, its steepest drop since May 2025. This decline signals that capital is rotating out of Bitcoin and into altcoins. It's an essential precursor to any true alt season. Technical breakdown: BTC formed equal highs near 66%, then broke its rising trendline as successive lower peaks emerged. A decisive close below 64% confirms that dominance is fracturing. Implication: as BTC falls, altcoin market caps grow faster than Bitcoin's, allowing smaller cap tokens to outperform even if BTC itself is hitting new highs. This dynamic is precisely what we saw on July 9th, when BTC soared above $111,000, yet BTC continued to decline. In effect, altcoins outpaced Bitcoin's rally, a rare but powerful signal that investors are seeking higher beta opportunities beyond the largest crypto asset. Coin market caps. Altcoin season index sits at a mere 26/100ths, traditionally indicating Bitcoin's dominance. Yet that metric lags the reality on the ground. Data from TradingView shows the total to altcoin market cap has rebounded by nearly 10% since the start of July, recently eclipsing $1.2 trillion. This rebound isn't isolated. Many altcoins, especially those outside the handful of megacaps, are posting double-digit gains over 48-hour windows, wiping out months of underperformance against BTC. Traders hunting for alpha are zeroing in on small and mid-cap projects, driving fervent short-term rallies. Anonymous analyst Master of Crypto argues that you don't need a Bitcoin crash to spark an alt season. Instead, sustained BTC price consolidation, coupled with continued BTC declines, is fertile ground for altcoin rallies. He highlights two key IMA thresholds on the BTC chart. 50-day IMA drop below this level typically heralds a small alt season, where low and mid-cap tokens see outsized moves. 200-day EMA breaching this more significant support zone signals a major alt season, unleashing capital flows into even larger projects like ETH and Sol and sparking memecoin PARABOL. As of early July, BTCD is flirting with the 50-day EMA. If it dips below that threshold, we could witness altcoins outside the top 20 by market cap outperforming significantly. A subsequent breach of the 200-day EMA would mark an extraordinary shift, inaugurating the broadest alt season since 2021. A second critical factor is the record-high stablecoin reserves on exchanges. Analyst Oinen_T at CryptoQuant notes that USDT and USDC balances on Binance exceed $31 billion, even as BTC reserves fall. This divergence reflects two behaviors: Bitcoin withdrawals during bull phases. Bitcoin often leaves exchange wallets for cold storage, indicating long-term accumulation and reducing available selling supply. Stablecoin accumulation. A rising stablecoin balance signals idle capital, dry powder waiting to be deployed into promising altcoin trades. When that stablecoin liquidity begins to flow whether into ETH, SOL, or smaller alt tokens, the market can ignite swiftly, with stablecoins acting as rocket fuel for alt prices. This setup mirrors prior cycles, where stablecoin spikes on exchanges preceded explosive alt rallies. Despite these bullish signals, retail investors remain skeptical. After numerous false starts since 2021, many small-ticket traders have learned to wait for confirmation before jumping back in. A recent survey showed that only 25% of retail respondents believe an alt season is underway, down from 45% 3 months ago. Yet whales are acting decisively. It's the whale-to-retail ratio. Ratio measuring the relative buying power of addresses holding 1,000 ETH, or 100 BTC, versus those holding 1 ETH, or 0.1 BTC, has held above 1.1 since late June, and Alfractal's whale heatmap highlights significant buying activity in tokens like ALGO, Link, and Una projects with solid fundamentals, cross-chain utility, and robust developer ecosystems. This imbalanced whale enthusiasm versus retail caution creates a classic smart money versus dumb money scenario. Whales accumulate at current levels while skeptical retail delays purchases until momentum is undeniable. This dynamic can exacerbate rallies once retail capitulates and joins in. Institutional investors aren't ignoring altcoins either. July saw significant flows into Ethereum ETFs, $211 million in Solana, staking funds via new specialized products. While Bitcoin still captures the lion's share, these alt-focused listings are gaining traction. ETFs now hold $4 billion. ALM, up 20% month-over-month, SOL staking products, record inflows, exceeding $50 million in July alone. These products provide regulated, liquid vehicles for institutions to gain alt exposure. As compliance pressures ease and regulatory frameworks crystallize, more capital will flow into Ethereum, Solana, and eventually a broader basket of Layer 1 tokens historically. Alt seasons are marked by sharp spikes and sudden reversals, not the measured grind often seen in Bitcoin bull runs. Over the past 48 hours, to 98% of altcoins outpaced BTC returns. Average altcoin trading volume across top exchanges rose 35%. Ethereum's volume share of total crypto volumes jumped to 30%, its highest since the last major alt season. These data points reflect heightened volatility and liquidity, confirming that whales and institutions are executing substantial positioning in alt assets with high reward potential comes elevated risk. Key hazards include regulatory flashes. Any unfriendly policy from major jurisdictions can trigger swift pullbacks. Market exhaustion. Rapid alt rallies can burn out quickly, leaving retail overexposed BTC redominance. If BTC bounces above 66%, it could siphon capital back to Bitcoin. Curbing alt gains. Savvy traders will employ position sizing, stop-loss orders, and tiered exits to navigate the expected surges and dips. Portfolio diversification across strong fundamentals like DeFi. Blue chips and emerging Layer 1 South can mitigate single-token volatility. To confirm that altcoin season is truly underway, monitor BTC dominance below EMA 50, small cap rally. Trigger. BTC dominance below EMA 200, broad alt season confirmation. Stablecoin. Outflows. Large withdrawals from exchanges executed into alt positions, ETF and staking. Fund inflows. Sustained monthly growth in ETH and SOL products, whale accumulation. Clusters. On-chain alerts for 1,000 plus, ETH transfers into unknown addresses. Retail sentiment shift, fear and greed index tick from neutral back toward greed for alt-heavy tokens. As these indicators align, the path toward more protracted alt rallies opens. Short-term bursts may fade, but deeper, more sustained upswings can unfold, mirroring the multi-month alt seasons of 2017 and early 2021. The crypto ecosystem is no one asset show. While Bitcoin laid the groundwork for digital scarcity, altcoins drive innovation and growth across DeFi, NFTs, gaming, and real-world asset tokenization. The recent date in 98% of altcoins outperforming Bitcoin in just 48 hours, alongside collapsing BTC dominance, whale accumulation, and ample stablecoin dry powder, all point to an emerging alt season for investors and traders. The opportunity lies in identifying tokens with solid fundamentals, robust communities, and real utility. Whether you're targeting 10x gains in emerging Layer 2 protocols, 5x moves in DeFi blue chips, or rapid swings in meme coins, the next phase of the cycle demands agility, research, and disciplined risk management. So, is altcoin season coming? All signs point to yes, but remember, it's a marathon, not a sprint. Stay vigilant, stay informed, and be prepared for a market adventure that could redefine the next chapter of blockchain finance.